Now, most of you already know that the GDP forecast for South Africa for the year 2023 has been cut to 0.1%, meaning that the economy in South Africa it's only expected to grow by 0.1%, which is not good at all, because, ladies and gents, this definitely means that companies or most companies in South Africa are expected not to grow, which is something that obviously does not attract investors, and it will result in some of the companies that we also invest in, or most of the companies we invest in the stock market locally, not performing that well in terms of the share price. Now, this is something that is a concern. You must really do some due diligence for you to find those companies that can probably outperform the market or do well amidst these, of course, economic constraints that we are currently facing in South Africa. And I mean, most of you already know that one of the things that is really hurting our economy is, of course, load shedding, which has impacted a lot of companies from mining to retailers. I mean, we've seen companies coming out with mitigation measures, having to spend a huge chunk of money trying to address this load shedding. But these, or with all these that these companies are doing, it is not enough, which is why we are seeing, of course, the GDP of South Africa annually being cut to 0.1%. And of course, this was revised from the 1.1%, which was initially projected for the year 2023. So this, like I said, makes you, or has to make you, to reevaluate how you invest in the stock market, which is why personally I've been saying on this channel that you need to obviously diversify your portfolio. Don't just only invest into local companies, but make sure that you are also investing in companies abroad. And still, when you talk of companies abroad, like companies in the US, you will know that also they have got problems of their own. Or the US, if there's one thing that is common or that they are facing, the same thing that we are facing in South Africa, it's the issue of high inflation and increase in interest rates. This is something that not only is it hurting consumers, but it is also hurting the companies that we invest in. I mean, right now in the US, it's earnings season, which is where we see companies reporting their earnings, or companies are reporting their first quarterly earnings. And I must say that it is quite amazing how the reactions that obviously we are getting to see from analysts, from retail investors after these earnings. I mean, just yesterday we saw companies like Maida beating analyst expectations on their earnings, which resulted in the share price of Maida to finish the day up over 13%. But those earnings, if you have a close look at them, you will realize that they are not that good, because if you compare those earnings against the Q4 earnings, you will realize that Maida reported lower revenues than the revenues they reported in the Q4 of 2022, which is a concern. And this is something that, ladies and gents, a lot of investors are not really seeing, or some of the investors rather are not seeing, and that is the problem of earnings, or of companies, yes, beating analyst expectations, but companies failing to beat the revenues they generated in Q4. So meaning that the total revenues that you would compare that those companies reported in Q4, we are having to find them becoming lower than the revenues that they generated in the Q1, or the revenues they recently announced for the Q1 of 2023. And you can go and have a look at Amazon. You will find that it's the same thing. Their revenues, they failed to beat revenues they reported in Q4. Go check Intel, go check Visa. You will notice that these companies, which are some of the big tech companies in the US, failed to beat, of course, the revenues they reported in Q4, which is something that obviously has to make you wonder, or has to make you strategize and find those companies that, of course, their revenues continues to grow. Because one of the company that, of course, in the US, which really made me to really feel the excitement, or really made me to want to closely monitor, is Microsoft. Because Microsoft, if you go and have a look at the kind of earnings they reported for their Q1, you will notice that they are higher than those they reported in Q4, which is something that makes you want to think that Microsoft, it is a good company that you would want to put your money in, because regardless of the current economic conditions, this is a company that we are finding it to perform better than the other companies that obviously, though they are beating analyst expectation, they are failing to beat the kind of revenues they reported in Q4. I mean, Intel, you will remember that this is a company that after their Q4 earnings, they reduced their overall guidance for the year 2023, and that resulted in the shares of Intel to drop by over 10%. Now, this very same Intel, ladies and gents, I mean, if I can remember, the total revenues for Q4 were around $14 billion, and yesterday they reported total revenues of around $11 billion. But wait a minute, they managed to beat analyst expectations, because analysts were expecting them to obviously report less revenue than the 11 billion, or the less total revenues than the 11 billion they reported yesterday. But if you closely monitor their revenues, you'll notice that it is a drop from the $14 billion we saw in Q4, which is something that makes me wonder the kind of outlook we are going to continue seeing, because yes, companies, we are seeing them beating analyst expectations, but companies are not growing in terms of revenue, and we are going to sit with companies whose revenues are not much, or are not higher than those revenues they reported in 2022, which, if you can find a company, or the strategy, or the good strategy that you might want to have a look at, is finding that company, or those companies that they are growing in terms of revenue, meaning that their total revenues for 2022 are going to be smaller, or the kind of revenues that they generate for the year 2023 are going to be obviously higher or bigger than those they reported in 2022. So my strategy is really quite simple for the year 2023, and that is, I'm trying to find companies whose revenues continue growing. I'm trying to find companies whose revenues or their earnings continues to be better than those for the year 2022. That is my simple strategy, or that is the strategy that I'm currently following. The more I see, especially companies whose earnings continue growing but the share price plummets, those are the companies that I'm easily targeting. Those are the companies that I want to put my money in, because I know that these are companies that are finding themselves performing so good amidst the current economic constraints. And if they are able to do this, imagine the kind of revenues that they can be able to generate when the economy is stable. Imagine the kind of revenues they can generate when the South African economy stabilizes. Imagine the kind of revenues they will generate when the US economy stabilizes. So this is my strategy that I'm using currently when I invest in the stock market. And now I almost forgot the house rules, and that is, of course, these are just my opinions. This is not financial advice. I'm not saying do this. I'm not saying go out there and use this strategy. These are just my opinions, and if obviously you seek professional financial advice, you already know what to do by now. That is, you need to go and consult the professionals. But one thing that I would really like to request from you is that if you're enjoying this content that I'm giving you, consider hitting the likes button, as it also helps with YouTube's algorithm. Otherwise, if you have not subscribed, consider hitting the subscribe button and click that notification bell, so that at least you get notified on YouTube every time I drop a new content, because on this channel we are all about the stock market. I make tons and tons of stock market videos, because this is something that is really close to my heart, and I am currently so much active into investing into the stock market, which is why I've decided to I continue to release or drop new videos almost on a day-to-day of what is it that I'm seeing in the markets, what is it that I'm seeing in some of the companies that I invest in. Otherwise, with all that, guys, I just thought I should just give you this quick updates. If you enjoy this video, don't forget, like I said, to hit that like button, comment and subscribe. And once you subscribe, don't forget to hit that notification bell. But it is important that when you see someone probably recommending you to buy a certain company or certain stock, you don't just take their word, but you need to also go and do your own due diligence, so that at least you don't panic sell, or so that at least you can be comfortable when you are investing into the stock markets. Otherwise, that's all from me, and God bless you all.